I'm Matt Bishar with NAREIT.com. Joining me for this edition of Fundamentally Speaking is Calvin Schnure, NAREIT's Vice President of Research and Industry Information. Calvin, thanks so much for joining us.
Thanks for having me, Matt.
I'd like to start by talking today about commercial construction and how it's impacting the outlook for commercial real estate. We've definitely seen an increase in activity, but what's your take on what's going on out there?
That's right, Matt. We've seen an increase in commercial construction across the board. Every major sector has seen increased spending. If you look in terms of the total amount of dollars that are spent, the third quarter of this year is up 16% from what it was a year ago. Now, some of the sectors have been strong already. Multifamily construction continues to rise, though. It's up more than 30% from what it was the year before that. We've also seen increases in other sectors. Office construction is rising 20% over a year ago. Lodging is up 15%. So we're seeing strength really across all the sectors in the economy.
Now, with the increase in activity, we're also starting to hear some concerns about possibly overbuilding that may flood the market, hurt rents, hurt valuations. Are you concerned?
It's too early to worry about overbuilding, Matt, and that's largely because you have to look at where we are versus where we've been. Now, there are some pockets where you are going to have some weakness. The Washington, D.C. apartment market did get ahead of the local demand, and we've seen softness in the rents here. But for the most part, the increases that we're seeing, and we're seeing some fairly large increases. We're looking at total construction versus the trough. It's up 50%. If you look at inflation-adjusted construction spending on all sectors, it's up 50% from what it was at the trough. But that doesn't reflect a really big market right now as much as it reflects how weak we were in the trough. If you take a longer perspective and you look at, say, where we were in the recession following the trough following the 2001 recession, we're actually 20 to 30% below that level. So these are still low levels by any means.
Calvin, thank you so much for joining us.
Thanks for having me, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.